Laura Winter, and I am the editor and host of the Downlink podcast. Today, we are live streaming again in partnership with STAXTalk. This week, SpaceX reported its first earnings ever as a public company. The earnings are for the second quarter, and the company hosted its first earnings call, plus the first tranche of SpaceX insider shares unlocked. That means that instead of roughly 640 million shares in the market, there's now more than 1.5 billion. Well, more than twice the tradable shares that were already on the market. We are live streaming, and we want to introduce everybody who's here on the line. And so we're going to start first with Chris Quilty of Quilty Space. Chris, what do you do and where do you do it?
Thanks, Laura. So Quilty Space is headquartered down in St. Petersburg, Florida, and I've been writing financial research on the space industry for about 20 years.
And George.
Good morning, Laura. This is George Pullen. I'm the chief space economist for MilkyWayEconomy. We're a fifth industrial revolution think tank. We focus on space technology, defense technology, and anything interesting that goes bump in the night.
And Lou, you are from the Motley Fool. What do you do for the Motley Fool?
Yes, good morning. I am a contributing analyst focused on aerospace and in the industrials. For Motley Fool, we have a bunch of stock portfolios and stock services.
So what we're doing here today is we're going to take a really serious look at the earnings report, what's good, what's bad, what's foggy, and how perhaps SpaceX's fortunes now affect the space sector. Gentlemen, thank you so much for joining me. Now, before we go any further, I have to let you know, as in everyone out there who is watching or listening, this discussion is not advice. You should do your own research and make your own decisions about SpaceX or any other security or investment. And if you like this discussion, you can find and follow StaxTalk and the Downlink on YouTube. Now, to start with, I want everyone, no matter who you are or what you do, to be able to follow the two big SpaceX events, which are separate events, but really connected. And I want the professor among us, our Professor George, who lectures on the space economy, to give us the mechanics, specifically what these two events are, why they're also connected, and why they and the connection are important. So, George, want to start with earnings and then the unlock, like how that all works?
Sure. So it's typical for companies when they become public, like SpaceX has become, to make regular quarterly earnings calls. Now, those earnings calls are published. It gives chance for analysts to dive into the numbers of what's happening with the business now that there's a greater amount of transparency, again, because they're now a public company, just like General Mills or GE, right? They're the types of companies now that anyone can see what's going on inside of. That means analyst coverage is also going to be making sure that they know what's happening, and then they'll also issue their own reports, right? So you have the earnings announcements and reports, and then you have the analysts coming in and giving their thoughts on the reports. A best practice is read both. Reading is free, folks. And so you can read what a company actually says about itself, and then you can read what an expert says about them. Now, both of them will add color, but again, read both. The next part of it, and why this is important, is this is their first earnings announcement after their IPO. So this has a greater level of attention than your typical earnings announcements. Okay, it's what's happening under the hood. I will preface that by saying, usually when you have a first earnings announcement after an IPO, anything good has probably already been baked in, because if it was going to be good that soon, they probably would want to put it into the materials for the IPO, so they got a good IPO price. And as we all know, SpaceX got a fantastic IPO price on a multiple basis. Next thing is the unlock periods. So unlocks are a normal mechanic in any company that goes public. For the unlock, what that does, it is a financial engineering tool, okay? And what it does is it says, okay, there's a lot of individuals who were part of this company earlier on, and those individuals, whether they be literally, engineer Joey or engineer Barbara who were in the company early on, or they were perhaps an early VC or private equity firm early on. Their stock has grown greatly, and now that it is publicly available, the company itself doesn't want that to be a large amount of selling activity immediately hitting the stock. Okay. And so what they do is say, okay, we have to stage this out. So let's have a rolling unlock where this group of investors can unlock some today, you can unlock some tomorrow, and you can unlock some in a few months. That's, again, a very normal structure. Now, I will note that as a financial engineer, this unlock structure is quite unique and quite well planned. I got to be careful how I say that.
You're stealing my follow-up question, actually.
Yeah, it's quite well designed.
I was going to ask you if this is normal, right? Because
no,
it's there not. Are a number of unlocks, and this unlock that happened yesterday is 20% of the private shares, right?
Yeah, so it's 20% of the private shares that are coming on, and what it's essentially done is greatly, double the size, more than double the size of the float. And the float is the amount of shares available for you, me, or Fidelity to go buy for their index funds, right? So that is a material number, right? When you have that much more liquidity in a stock. But I think it's unique for good reasons, right? You have a founder who has a very large number of shares for a unicorn. Typically unicorns, aka a company that hit the market over $1 billion. We don't have a name for a company that hit the market over $1 trillion. If someone wants to make one up right now, go for it. Maybe a Manticore. Yeah, D&D reference. Okay. But anyway, so you got to have something to call it, right? So it's $1 trillion company when it hits the market. We probably won't see very many more of those, AI notwithstanding. So anyway, the point is, like, it's a unique structure. And so I get why the unlock structure is also unique, right? I'm giving them a pass on that as a professor, right? So that's a passing grade. But what we have to remember is not only has there been a holdback in the amount of liquidity, amount of float in these stocks, but there's also been a lot of pent-up demand for years of people who wanted to get into this stock. So I don't think it's unusual that when we've seen this recent round of unlock, that triggered a lot of buying, right? We've seen the stock appreciate in the last few days.
Just this morning, it went up by 8%, and I don't know where it is right now, but last time I checked, I can check right this second. Yeah, it's up by 11% so far.
Right. And so what you could see is, again, think about market mechanics, right? So there's a lot of quants that didn't decide to quit and be teachers, who stayed doing what they're supposed to do, and they have those buys programmed in, right? And so they knew that liquidity become available, and they're layering in their buys. So they're affecting a strategy that they probably built out 30 days ago, 60 days ago. Okay. So those buys are hitting the market right now. I don't think it would have been unusual at all if the stock had been down 10% on the earnings announcements or up 10% on the buying because of the float being increased. So both of these things are balancing each other. And I think that's just the normal ebb and flow of the stock price right now that we're seeing.
But we're also going to see a lot of unlocks between now and the end of the year, are we not? There's two. There's supposed to be another unlock this month. There's supposed to be 2 in September, 2 more in October. And then I think another is going to be triggered by third quarter earnings. So there are just kind of like a lot of opportunities to buy more of SpaceX stock, I suppose.
Right. And we'll also be seeing what those look like with respect to, again, what happens in the Q3 earnings, right? So that unlock is staged by that or planned out for that announcement. But you'll also see how this ties back to other headlines, not just for the company itself, but also, macro economic headlines. Again, like, all these companies function within the larger economic environment that we're living in. If we see a move in interest rates, that's going to affect all the stocks. Right. So we got to keep in mind that some of these unlocks are happening near other big announcements, like a Q3 earnings announcement. But other of these unlocks, are they going to come about at the same time as a big new contract that they've been working on? Or are they going to come about, on the heels of perhaps an economic announcement that they weren't anticipating? Right. So again, this is just, how stocks work in the public space. And now that SpaceX is a public stock, it's how it's going to work in the space.
Well, thank you so much for the lesson. Okay, now that we have all or most of the mechanics, we're going to dive into what I'm calling the good, the bad, and the foggy. So staying with you, George, and guys, I do want you to jump in on this after George gives us, his answer. But when you look at the earnings report for SpaceX and the 10Q, that's the SEC filing. What's actually good?
Oh, I got to go first on what's good. Okay.
Yeah, you do.
Well, yeah. So I will tell you.
I'm trying to be nice to our other,
because they have
our
to do the
buddies
bad and the
here.
ugly. Oh,
No,
I'll
no,
do
yeah,
good
well,
then.
no,
Yeah.
but they're gonna come in and give us maybe a good thing too if they want to be quick and efficient.
All right.
But
Yeah. I mean, I'm always so good at bad and ugly, but I'll do good. Okay. So
you
for the
can
good,
get in on the bad and the foggy. We don't have an ugly here. It's foggy. I'm trying
foggy.
to be
Okay,
fair.
we're being nice.
Yeah.
I was trying to do the movie, right? That old movie.
I
Anyway.
know.
All right, so for Star, let's just call it Starlink. Right? That's the good. The Starlink subscriber growth is tremendous.
12
they did
million
reveal that they're a little,
subscribers.
they revealed they're a little less profitable. Like their revenues are down on a per subscriber basis, but they're growing a lot of subscribers. I would say if I was going to do a comparison, though, I'd want to know what is the increase of that subscriber community, right? So we've seen announcements by EchoStar and others. They're losing subscribers, but yet we have Starlink gaining subscribers. Are we actually growing the size of the pot, or are we all just fighting over the same pot that really hasn't organically grown that much, right? I'd like to see that detailed out in an analyst report. But that's the good right now. They're definitely winning subscribers.
They're growing the pie. Yeah, I mean the two U.S. providers, Viasat and Hughes, they peaked at 2.4 million subs after 15 years of trying to grow their consumer business, using geo satellites. The fact that they added 1.7 million subs in the quarter, gives you a sense that yes, the legacy providers, they're still bleeding, but they're bleeding 20%, a quarter. Most of the growth that we're seeing here are new users. So they're growing the pie. I guess the question is also how much market share they're taking from non-satellite providers.
Yeah. I mean, backing out, guys, all of the headline numbers, and now granted, there are more asterisks on those headline numbers than there are stars in the sky, but look, 92% revenue growth. If you look just relative to expectations, they beat by what, about 16% on revenue compared to what Wall Street is expecting, 75% on EBITDA. And again, EBITDA is earnings before interest, taxes, depreciation, amortization, and in SpaceX's case, again, 17 more asterisks, but it is what it is. It is the bogey that was out there. The headlines were good. The simple takeaway was good. There's a lot underneath the surface that needs to be talked about, but this was holding serve, at least as far as what Wall Street was asking for from their first report.
There's also a $6 billion plus new multi-year Starshield Space Force contract. Yeah. So that's not chump change, right?
Yeah, it's like, I mean, I would say one other thing here on like the good versus the numbers, and it was hit on nicely, I think, which is they're growing the pie, which is what I was hoping Chris would say. But to Lou's point, I think people also looked at what happened with the AI CapEx number. And they thought to themselves, wow, that's almost 16 billion out the door in AI CapEx. So again, I've said it before, but this is an AI company. And so even though I want to put on my hat and tell you more and more about, what's going to happen with Starship and what that mean for the space economy and what Starlink connectivity means for people and our allies, we all have to just like take the breath and realize like, that CapEx number is enormous, and it's over the size.
Grew.
Oh, and it's well over the size of these other segments. So, we really have to put on like our AI thinking hats, and how this thing values out, because that's also the only way these multiples make any sense, right? Both the IPO multiple and its current multiple. That's the only way it makes sense.
So, Chris, what's the bad inside of this earnings report?
Well, George just stole my thunder there, you know. When you
Well,
think
look,
about,
you can
well, I
you can
mean,
flesh that out, because the thing is, I mean, there are numbers about
I mean,
how much between now and 2030 that AI CapEx is going to be, and that I think it was what 100 and something billion, and now it's something like 400 billion between now and 2030. I mean, that's a massive amount of money.
does that include TerraFab or not? You know?
Well, gee, that's the foggy, right?
Yeah.
So hold on to that thought. I mean, yeah, where is TerraFab in all this? I mean, for sure. But
No,
yeah,
I mean,
what's the bad?
it was kind of eye-opening, you know, for most space companies. If they spend $1 billion or $2 billion a year on CapEx, that's a big number. You know, I think the space business here was like 1.6 billion. And then, you know, the AI spend was 10x that, right? So doesn't matter how quickly they can grow the Starlink business, which is the cash generator. They can't grow it quick enough, you know, to catch up to the AI bleed. So that clearly that was the headline number. The reason the stock went down was because of the CapEx spend. I tell you, the other thing, to me, the biggest takeaway from the quarter, and it's good, bad, ugly, all in one, and honestly caught me by surprise, was, you know, Gwen and Elon and Brett, they dropped the gloves, right? In their first public speaking event, they not only said, we are going to step out and take away the M&O business with our direct-to-device. You know, we're going after AT&T and Verizon and everybody else we've been partnering with. But they didn't stop there. They then said, well, we're also going to take the entire global internet business and we're going to dominate that. So all you cable and fiber guys out there who've sort of put us on the shelf as the rural provider, you know, they're going for the whole thing. And that was a pretty bold, you know, statement on their part. So it's good, right? If you're investors, like, your TAM just got a lot bigger than what you thought it was. You know, the bad and the ugly is they've got to execute on that and compete and prove that the technology can actually go there.
That's actually a really sharp observation. And I do remember when they said that, and it was, what? What? You're taking over the world? Oh, okay. I'm sorry, I missed that. Yeah, that was pretty major. So Lou, you guys keep calling it ugly. I call it foggy because I don't know if it's ugly or not, right? Because maybe to me, it's just not well understood. And that goes back to what Chris said. Yeah, what happened to the fab? What happened to TerraFab? Like, where is that? Like, I thought that was like the golden jewel in their crown in the prospectus, that we're going to build this thing.
No, that's orbital data centers.
Well, that, you know, that too.
This time next year, Chris.
We're going to build this to build chips so that we don't have to depend on NVIDIA. And then in this earnings call, all of a sudden, NVIDIA is supplying them all of their chips.
Yeah.
What happened to TerraFab? And yet there is reporting out there in public records that they are going to sink $55 billion into building TerraFab somewhere in Texas. But it's not anywhere in the earnings report. What is that? Like, what happened?
So the frustration you're articulating, and I think this is to summarize what Chris and George were sort of saying, is that the foggy is everything. This is still a business that is more built around platitudes than they are what they're doing in the next 6 months and what they're doing over the next year. And I think that is the fog is, okay, exactly how. There was a lot about, I mean, I have plenty to say about the idea of them competing against AT&T. I think that's revenue hunting. If you need tons of capital and you see an adjacent industry with 600 billion in annual revenue, yeah, it looks pretty darn attractive, but that's platitudes. That isn't the plan of how they're actually going to build out their terrestrial presence. They have a run rate right now, a revenue run rate coming out of this quarter of about 31 billion a year. If you just take what they made, the revenue last quarter times 4. Elon said $1 trillion by 2030, if not 2029. That is what, guys? A little over 100% compound annual growth rate. when technically right now AI, one business is growing at that, but that's coming off of zero. That's their reinvention as a neocloud. That's not going to continue at that rate. I feel like the fog, if you want me to invest in the company, if you're going to say things like we're going from 33 billion to $1 trillion in less than 5 years, there really should be, we're going to do A, B, C, and D. I don't know if you remember that old Simpsons meme about how like step A was do something, B blank, and C profit. That was the tone of the call to me. It's like, we've got these great ideas, we're going to profit. And that big thing in the middle of like how we're actually going to get from A to Z, that's the foggy.
George, Chris, any fog for you?
Well, I think the way they're going to get there is Starship, right? I mean, I think that's the other thing that, is the takeaway here is so much of the business strategy is leveraged to Starship and its ability to, launch the V3 Starlink satellites, to launch the orbital data centers, to, create the space economy and build out. And it really is the leverage point for everything that they're doing. I think the last test flight went pretty good. And, the fact that they said they're going to start launching operational V3 satellites on this next launch, which is presumably, supposedly this month. I think last year when we were predicting for 2026, I think we said they'll squeeze off 6 or 8 operational launches before the end of the year. So we'll see where we are on that prediction. But, the fact that 365 days from now, they want to be launching once a day, that's another one. I think I'll take the under on that bet.
Yeah.
I also
that reminds me of we'll be driving coast to coast without a steering wheel by 2016 or whatever.
Yeah, I think Tesla platitudes, for all of us who remember them a decade ago, are perhaps worth going back and rereading today. Yeah. And then substituting word car for word Starship, or word car for word AI. We've come a long way, but we certainly aren't where we were told we were going to be 10 years later. And I think that if we look at what that means, particularly around AI, because, I knew this was going to come up, so I did a little digging. And again, I'm not an AI investor, so that's the asterisk. I'm not an AI professor currently, although I might teach one next semester. But it used to just be called big data. I could always teach those classes, but now we have to call it
machine
AI.
learning, right? I'm so old, I remember machine learning.
Yeah, it's like, come on, that's what we do. But no, it has to be AI now. Anyway, no, but the point is, if you look at what's happening, particularly when it comes to the AI build out, most of the large build outs, and this is not a direct comment on SpaceX, this is a broader comment. It's functioning on regulatory arbitrage. They're building out at speeds and scales that are ahead of those of the various, local and state regulatory bodies. And that regulatory arbitrage, if you look historically, never lasts. And so whether that means, 1 million gallons a day of water in Tennessee, or that means, some sort of encroachment on swampland in Mississippi or Louisiana, it's regulatory arbitrage today, but it doesn't last. It never has. And so that could be an AI headwind. And if that AI headwind comes in, given the amount of this company, which is focused on the success of that part of the business, I have concerns. And so for that, and for me, that's the foggy part here.
One other thing that I thought was foggy or missing in action that was in the prospectus was about Mars. There was no mention of Mars, not in the filing, not in the report, and not in the call. And I kind of felt like, well, wasn't this the point, of your whole SpaceX adventure? I mean,
go ahead, George.
You should mention it. I mean, there were pictures. There were pretty pictures on the report. So
the prospectus,
where's Mars?
The prospectus is a forward-looking document. It's a marketing document, but this is what we want to accomplish over time. A 10Q, an earnings report should be, back to my foggy comment, should be what's going on now. That would have been a yellow flag for me if they were going on and on about Mars in a quarterly earnings report. That would feel like a look at the shiny object over here.
Yeah,
Don't pay
I was
attention.
I agree with Lou
hear
here.
you,
I
but
agree with Lou here. I'm glad it wasn't in here.
Yeah.
Because that would have actually made me more alarmed.
Would it be cringy?
It would have been cringy.
Okay.
But it
Maybe
wasn't
if
in
they
here.
do an investor day, but for a quarterly report, I want to hear them talking about the next 3 months, the next 6 months, the next year, not we want to go to Mars one day, guys. Wouldn't that be cool? Because
Right.
that's
I mean, like,
yeah.
the black jeans and the black collared shirt, and we're going to go on stage at Investor Day, and everyone's going to rah. Yeah, give me some pictures of Mars. But that's not what this release was about. This was an earnings release. And so I'm glad it wasn't in there, because that's not something that's affecting myself, 6 months
we did get
out
the
or a
mass
year out.
accelerator on the moon.
We
So.
did.
We did.
We did. All right.
I mean,
was
and if you
something-
take him literally there, he's going to be manufacturing moons in that factory. But I don't think that's what he meant.
So there was something else weird
Jeez.
though that was in there, right? Can
Jeez.
we talk about on the call itself, somewhere near the beginning of the call, there was a brief segment where he was actually saying that they encouraged people to copy
Oh, yes.
Starship lock, stock, and
Yes.
barrel, and that
I
they
remember.
welcome people to copy the entire thing. I've listened to a lot of earnings calls, back when I was a banker, of course, more than now, but I've listened to a lot of earnings calls, and I can tell you, I can't think of a single one I've listened to where someone actively said, 1/3 of our business, I welcome someone to go copy it. Let's have as much people copying it as possible, so to get as much mass into orbit as possible. I've never heard something like
you know
that.
what's interesting to me, especially in this podcast, in this light, George, I heard that too, and I shouldn't put words in Elon's mouth, but to me, that is saying what they think of their space business relative to the AI and the other opportunities. Nobody says that about their core thing. Google isn't going to say, we encourage you to copy our search algorithm, because that is their secret sauce. That to me is sort of disappointing as a space focused person, because it feels like that, yeah, this is the commodity. This isn't our special sauce, is our launch business part.
And
big part
the
of our
whole
space
idea that Grok 5 is going to be completely trained on all of SpaceX engineering data. I had to stop it, rewind, and listen again. I was like, that's not what was said. I didn't hear that right. That's, for the entire space industry and for space tech at large, here we go, right? I'm excited. But again, I'm excited because I'm going to be now paying the XAI segment of the business, so I have access to SpaceX engineering models and 25 years of SpaceX engineering data, right? Because now that's the most appealing thing to me. But again, that's, you're sort of robbing Peter to pay Paul, and now you're one company.
Yeah, and maybe I'll take a more gracious view towards that statement, which is, two things. Number one, and I've heard, like Jensen Huang, of NVIDIA say the same thing, is, if our competitors are focusing on our current technology, they're not skating to the puck, because, we're advancing the technology, and, if they repeat what we've already done, we will have moved so far behind. And I think that has been, the history of SpaceX is, they are innovating constantly. The fact that they are going to retire the most successful launch vehicle in history, the Falcon 9, and just put it on a shelf because they came up with something better, like, sounds crazy, but like, that's the classic innovator's dilemma. Like, they're moving to the next step. And I think the other thing about, copy our technology or whatnot, again, I think if you believe that both Elon Musk and Jeff Bezos and others have this expanding view of mankind moving out into the stars, they can't do it alone, and they do want other companies, but not the Chinese necessarily, out there repeating what they do.
All right. Well, then, so here's a question for us space nerds. Right. So is Musk focused on space. And while I do trust Gwen Shotwell on space launch and satellites, she's not the head of just those segments anymore, right? She's the president and chief operating officer across the AI segment as well. So is this a concern for the space sector, for commercial, civil, and especially defense, all of which depend on SpaceX?
Well, I don't know, maybe not. I mean, I thought one interesting statement that also came out of the earnings call was the fact that they are taking their best SpaceX people and putting them on the AI data center effort. And this is something that's happened in the past, right? I mean, you've seen the cross-pollination of Tesla and SpaceX people helping with manufacturing. When they had the red weekend of the Starlink team being fired, they ended up pulling people from, the launch and Dragon crews to come in and try to fix things. So, it'll be interesting. Can they actually bring? I think he used the analogy of the major leagues going down to the minor leagues in terms of taking the engineering talent and cross-pollinating. I think that's the upside. The downside is, of course, if you take your best engineers and supervisors off of the current task, on the space side, do you lose a beat?
I'm asking this though because it has been a criticism of Musk that he has taken his eye off the ball in terms of Tesla, right? SpaceX started as a space company. Now it's an AI company and is putting a massive amount of capital into building out that AI company called CapEx, right? 15 billion, I think, this year or something. Or maybe it's just the quarter. I can't keep track. But I wonder if the space side is going to receive its due attention. Because that does have an effect on the rest of the space sector. Everybody depends on SpaceX right now. NASA depends on SpaceX. The Space Force depends on SpaceX. The NRO depends on SpaceX. I mean, we can just keep going on down the list, right? But if you're wanting to make $1 trillion in revenue by 2030, that kind of means to me that you're putting your focus somewhere else and you're spending a lot of money to do that, right?
This is probably too blunt, but at this moment, SpaceX is a neocloud with a telecom business and a side hustle as a defense contractor. Neocloud is basically just renting out data centers. The telecom business is Starlink, wherever they're taking it. And then, Laura, to your point, the space business, the defense business is there, but it doesn't seem to be the focus. I think the charitable take and maybe the honest take on it, though, is that given the capital needs of this business, it makes some sense from a management point of view to gain revenue, to gain cash where you can, and then invest it. Elon still seems invested in the space project. I don't think he is distracted. I don't get the sense that he wants to go back to, designing a new electric car or something. I don't worry about him losing focus on SpaceX, but I think the pragmatist is go chase revenue and go chase cash where you can, and then hopefully invest as needed. Chris, I think you said it, that it's weird to see CapEx from a space company, the way SpaceX is. They are still spending $1 billion or so on space CapEx. So if they can, even if their attention even if their attention on the earnings calls seem to be about AI, if that's where they're going to get revenue that they can then reinvest in all parts of the business, that can still work out fine for space. At the end of the day, will space get the investment that it needs? That comes down to, how things go in the other businesses and their ability to raise cash. But I don't necessarily think that just because their focus seems to be on this AI opportunity right now, they're starving space.
Yeah,
All right.
I'll expound on something I said before, which is if you listen thematically what he said here, broadband, the best place to do broadband from space. Cellular, communications, best place to do it from space. AI and building data centers, best place to do it from space. And, you know, it was a side note here, but they also have the Starfall program, which was kind of quietly announced, where they have these big hockey pucks that they're going to do manufacturing in space. And you know what? A lot of things that you can manufacture in space, whether it's semiconductors or fiber or whatnot, is better in space. So I don't see them, you know, moving off and becoming, you know, I mean, the revenue and the CapEx are going towards the AI as the enablement here. But I mean, let's be clear. I mean, Mars is the goal, and it's about space in the long term.
All right. Well, then what is SpaceX's effect on the space category? What I mean by category are other space companies, both you know, publicly traded companies and privately held companies. The effects may be different, and I'm asking this because it's been seen that when SpaceX share price, when it goes down, it seems to drag down the whole category on the market. And when it goes up, it tends to pull everybody else up with it. And the thing that kind of puts me in this sort of questioning position is that, again, SpaceX is an AI company. So if the AI category is doing bad, is it also dragging down the space category, right? For no particularly good reason, because it has nothing to do with space. So yeah, starting with Lou, you know, what is that effect? I mean, am I right in what I'm seeing?
I think you're right, but I think it's helpful to back out here, because the one thing, if you look at the last year or two, Elon has a halo effect, and there is definitely more attention on the space sector. And I think maybe not the valuations of a few months ago, but there has been a net positive effect on valuations, which, yeah, as an investor, good or bad, but it has given companies, I mean, look, Redwire, Rocket Lab, so many of them have gone to market at elevated valuations, raising capital that they can put into the business, kind of because they are trading at high multiples that, at least in part, is due to the halo effect. So I think for
Right, but there's
equities,
a
at least,
reverse to that, though. I mean, that's great. You're talking about the up, you know, when
sure.
SpaceX goes up, but when SpaceX goes down for a reason that's because of AI, because, you know, let's say the AI
So,
bubble bursts or something like that. I mean, won't that then drag down other space companies just because SpaceX is involved in AI?
it could, and then we have like a chicken and the egg argument of like, well, if they're valued at places they would have never have been, is that, you know, was it still?
True.
Actually, this is why, though, I'm glad we've seen so many secondaries, because these young growth companies that aren't cash positive should be taking advantage of this and getting it while it's good. Because I don't think, as a management team, you can assume we will have this valuation. I mean, again, look at Redwire. What, it went from 9 to 23, back down to about 10. You know, so get it while it's good. I do think, too, though, the opportunity here, and Rocket Lab is probably further along here, but as these businesses, with each passing quarter, they can make more of their own case. As these businesses mature, I think there will be at least a bit of a decoupling here, where it's not SpaceX and the seven dwarfs, or the, what, gosh, with the way IPOs have gone, the 700 dwarfs, right? But as these businesses either mature on their own or don't make it on their own, I think they are going to trade more on their fundamentals. We have a lot of very, very, very young companies that in years past George would be looking at on the private side, that are now publicly traded companies. So if they got a current for at least a while that helped them establish themselves, that's a net positive. You're right. It could cause further volatility from here. But look, when you're trading at the valuations they are, valuation is a cost of doing business. I mean, volatility is a cost of doing business. So I don't know if I can really blame that on SpaceX either.
All right. So now I want to dive into the share unlock, right? Because the effects of the share unlock are really not just of one color. For insider shareholders, the unlock is the exit, the payoff for investing, which also means you have very serious means, because you can't just invest in a private company unless you've got a lot of money to begin with. But there's also a lot of other people who are involved, like SpaceX employees, who also have shares, and that this is a huge deal for them. So how does this first of all, affect shareholders on the outside of the company, the retail investor, before we actually talk about what it means for those who actually hold the shares. So Chris, yeah, how does that affect those that have shares that are on the outside of a company, and specifically for SpaceX?
Well, I think it's hard to draw any good conclusions here, inside of 30 days from a company's IPO with, as we've mentioned, lockups and indexes that, are all going to get SpaceX shares pulled in. But I mean, bottom line, whether you own them directly or you own them, through your index or your mutual fund, the answer is, this is one of the largest market cap stocks, in the market. You're going to have it in your portfolio, and it's going to have an impact, whether you know it or not. The other thing we have to think about with all of the unlocks here is, there's capital gains. I mean, people don't want to sell just because they can sell if they're going to take a big tax hit. And so I wouldn't think that just because they're unlocks, you're going to get people dumping stock. You've also got, portfolio managers, right, who are going to want to window dress and make sure that they've got sufficient SpaceX that they can show, when they, lock down at the end of the month and have to report their holdings. So there's a lot of things that go into it, beyond, simple, market access and an ability to sell. There's a lot of people who wanted to own SpaceX but couldn't get into an SPV, right? And so you do have that retail element. The volatility isn't helpful. It's a broken stock, and you can go back. There were other examples of, Google was a broken stock, coming out of its IPO, I believe. When you're down 10 or 20%, that's not supposed to happen. But this is an unusual, this is a one-of-a-kind name, right? The bankers did their best to engineer, a successful pop on the open, which we got. But end of the day, company's going to have to perform, and the stock will behave accordingly.
And just to illustrate the pop, I believe the 52-week high is $225, and right now it is trading at $125, roughly right around those parts. So George, I've seen your post on LinkedIn on the share unlock, and I really liked your take on it because it was making new capital essentially available to the space sector, possibly, and also making it so those who are carpenters or welders, that those who have been in the company for a long time, also get an opportunity at generational wealth. So there are actually a lot of positives. And I'd like you kind of to explain, how you think that this capital could be positive to the space sector.
Sure. So I think if we take one step back from, the VC and the private equity managers, and whatever, window dressing they're doing about how they liquidate or double down on their positions, and we think about the thousands of employees that SpaceX has had over the years, I'm personally friends, so this will be mostly anecdotal. I will hold back the names to save the innocent, and so that we can still get together for pizza once in a while. But I know dozens of these guys and gals, and they were at SpaceX for a season, right? They were there for a few years. They were part of a certain project. They got recruited away, or they went off and did their own thing, right? And many of them, by the way, did their own thing in a nearby, either directly in space, or they stayed doing deep tech. They stayed doing hard things that need to be solved, right? With their own startups or joining other people's. And I think that there's going to be a lot of positive from those individuals now finally having access to this cash. I think, especially the ones I know, have been involved with either, lending and lines of credit arrangements to date, right? They've had plenty of access to that because they were able to put their shares up and get those types of sophisticated financial relationships going with banks. But this is different, right? Now they see every day what the price is, and they know if they're worth 3 million today or 4 million today, because it's doing this. And those individuals, particularly the ones I know, they're going out and they're investing in their own companies. And the ones that were, fortunate enough to have perhaps an extra zero on the end because they're a little bit earlier. I know 2 or 3 right now starting their own VC funds, and they're going to be focused on putting money back into space and back into hard technologies, also defense tech. And I think that's going to be an overall net good for the economy and good for the sector.
And they're also going to be smart because they've been there. They've been part of it.
Well, yeah, especially if I'm one of their advisors.
Oh, well, there you go. Yeah.
Let's have some fun and put a real example to what George is talking about, because this is the opportunity of space, but we've seen this with software so many times. Because I'm going to read you a quick list of companies, and you tell me why I'm doing this list: Tesla, SpaceX, OpenAI, LinkedIn, YouTube, Yelp, Palantir, Affirm. What do they all have in common? They all came out of PayPal. They all came out of the so-called PayPal mafia. That was, and this is kind of, it's different because George talked about like the rank and file, and some of those were the executives, but all of those companies were basically funded out of the PayPal IPO and success. And, this is generations in Silicon Valley with software and hardware. This is now what hopefully, George, I think you're right. I mean, some of these people will go on to be founders. Some will go on to be angels. Some of them will go on to be venture capital, stalwarts. There is so much opportunity here. The other part of it too is that what SpaceX can do for this environment and the private environment. The real miracle of 1999 was distribution costs went to zero. That is the story of the internet. That, can you imagine if Mark Zuckerberg had to shrink wrap a box with Facebook software and a floppy disk and try and distribute it that way? It wouldn't have worked. In 1999, I couldn't have told you that some dude in Harvard is going to come up with some killer app that the world's going to have, and it's going to create $1 trillion company. I didn't have to guess on the app. I could have invested on the idea that this distribution system is going to create opportunities and smart people are going to take advantage of those. That is Starship. That is, if they can get it right with the reusable and if they get the cost down to what they want, the bet for private markets from here is that armed with that cheaper launch cost, I don't have to guess which smart individual is going to do it, but there are going to be smart individuals who take advantage of those lower costs and do all sorts of things that I can't even imagine today.
All right. Well, speaking of venture, though, right, because I think we've established that SpaceX matters a lot, affects a lot. But how does it affect venture investment into space companies, right? Because from what I have read, which could be wrong, right? But I've read that startups and young companies are having a harder time raising capital because more checks are being written for later stage technology development. Essentially, companies that have somehow proven their value or have contracts already. But when it comes to, actual new ideas like what you're talking about, that actually there's not a lot of takers right now. Is that true, George?
So I would say that the space and the deep technology companies that I advise for, or that I perhaps help on the other side, various VCs of the due diligence for, it's a mixed bag, right? I think there is a positive effect from SpaceX. I think there's always been a sort of a +1 on the rating if you're a SpaceX alumni. That's always been kind of built in, I think, in the space. I also think, though, that what we're seeing is because there's a real bifurcated market, right? You have private equity investors, which are enormous and dominate the space. Sorry, I'll say sector. Dominate the sector. And those individuals and those individual funds, let's just call it the top 10, they represent 80% plus of the capital deployment, right? So if you don't have the LinkedIn connection or the coffee event to get direct access to some of these folks, you don't have access to those very large pools of capital. And then on the other end of the market, you have thousands, tens of thousands of new smaller VCs and family offices popping up all the time, right? And I think that's way too broad of a segment to cast with a one brush. We just can't. I think for some of those, they're looking at what happened with SpaceX. They're looking at the positive externalities, and they're saying, okay, this is a moment for us to get into space more. And those phone calls are happening, and those companies that are engaged are being successful. But I think on the other side of the coin, you also have a lot of these investors that have a lot less capital to deploy. Again, bifurcated market, the second end of the market I'm talking about. And they're saying, you know what? I'm seeing my AI bets, 20, 30, 40x. Why am I going to put something over in space? So I think we have to realize that in that smaller end of the market, it's a lot harder to cast broadly what's happening. But I think in the top end of the market, because those firms have gotten so large, they can only deploy large checks. And so if your company can't take in that large check effectively, right? I work with a bunch of companies that can't effectively take in a $50 million check right now or a $25 million check right now. Hopefully they're not listening. But that's true. If you're not of a certain size, you can't effectively take in that much cash. And for those larger name recognizable PEVC firms, that's where their check sizes start. And so the market is very much segmented. And I think we're seeing a little bit of both right now.
But I'm curious because I think part of this hopefully might be what I was saying before, is that the space venture is still a smaller community, or the space startup. And this is where maybe a big influx of super rich angels, that we don't need venture firms necessarily with the bigger things, but an angel might say, look, I will give you $1 million to pay your bill this year and advice or something like that, sort of the very, very early stage. I feel like hopefully SpaceX is at least part of the answer to that problem.
Yeah, and I think the whole idea of a PayPal Mafia 2.0 idea that we're kind of all circling around here is very much an effect that we can monitor for and that we can see panning out, because it's actually even a little bit perhaps better than, gosh, I'm going to be all like all the good now, than the for 2.0, because if you think about what's happening with this quote unquote mafia, I'm using that in the best of terms, you have perhaps a space company forming that needs access to launch. Well, who are they going to go to get that mass to space? They're going to go to SpaceX. Or you have a company working on next generation AI models, or next generation applications for businesses to actually use AI to do something useful. Where are they going to look for their neo cloud solutions? SpaceX, right? Or even in the connectivity sector, like Chris was talking about. If you're talking about how that gets impacted, I mean, there's going to be people who say, okay, I understand what's going on here. You have a swarm of satellites then interacting with antennas on people's houses, and then those antennas on people's houses are producing a mesh network. Well, why can't I do custom mesh networks for people, right? Like all of these innovations are building on the last one, even more so than what we saw with PayPal, right? I'm not dismissing the importance of PayPal by any means. It's groundbreaking, but it's almost as if we can see this second round, mafia scaling off the backs of all three segments of the business that SpaceX says it needs to build over the next 10 years to be successful in the 2030s.
All right. I just have to throw in this question because we have been completely focused on SpaceX, and understandably so. But another thing happened this week that I think really should be noted, and that is what the hell happened to Hughes. That makes it the second EchoStar company to file Chapter 11 this summer. Actually, within the past, I think they were like 32 days apart or something like that. The other company that was an EchoStar company that filed Chapter 11 was Dish. Yeah, what's going on here?
It's just Charlie stiffing the bondholders.
I was going to say, sorry, Charlie, right? Wasn't
I
it?
mean, it is. I mean,
It is
when,
that.
when
Okay.
Hughes was folded into EchoStar, they had no debt and $2 billion of cash, right? It's a cash producing company.
It is. It's got contracts with the USG. I just recently had a fellow from EchoStar on the podcast, and I mean, they're doing some really important work.
I'll take a more positive spin on what Chris said, although I might not necessarily disagree. But look, there are, I mean, for all reports, and Hughes is losing ground to some of these new competitors that are out there. There is less cash to go around. And so, I mean, the initial bankruptcy is all about who has dibs on the cash because there are notes that are overdue. So the technical thing, I mean, what happened to Hughes was they are overdue on $750 million in notes, and they want to use that cash to pay the bills and keep the lights on. So this is what a bankruptcy court judge. The big picture is, though, is that yes, they have business, but there are more competitors now than there were before, and that tends to cause adjustments in cash flows.
EchoStar just got a big chunk of change, or is going to get a big chunk of change from SpaceX. I mean, they could pay the note if they wanted to.
Tell that to Charlie. Actually, yeah. Well, no, I mean, I think
everybody's got to explain who Charlie is. Just to be clear.
Charlie Ergen, the once and future king of space, who has been doing some really cool things, not always successfully, over the years. And Laura, you're right. But again, this is for now the bankruptcy court to decide exactly who has claims on what money, because it's a very complex structure under Charlie's world. I mean, it's not quite like the old John Malone with the Liberty this and Liberty that, but Charlie has there's a lot of businesses interacting with each other, doing different things, but with common DNA and roots. And I think we're just at a point where there are different claims on cash flows, and that is the job of a bankruptcy court to figure out.
All right, gentlemen, thank you so much for joining me today. This has been a fantastic conversation. And yeah, thank you so much for making the time. George, Lou, Chris.
Always a pleasure.
Next time.